All right, let's stay on the tariffs discussion and move into the retail sector. The XRT Spider ETF initially popped on the Supreme Court decision earlier, but it quickly gave up all those gains, is actually lower now by a bit, and now has moved now 0.5% higher. So it's been volatile. Here to help us make sense of all of this is SW Retail Advisors President Stacey Widlitz. We talk a lot of things about retail with you for good reason. So let's talk about some of the price action that we have seen. The tariff reaction in the markets and specifically within retail. Was it surprising to you? If so, why? If not, why not?
Well, you know, on face value, when they first announced this, it was like, all right, retailers were like headed to an early happy hour on Friday afternoon. And then when President Trump spoke, it was like, okay, put your drink down, because they're going to work these in another way, apparently. You know, not to mention the huge headache. I'd hate to be a CFO or legal right now at a retailer to figure out how you're going to get these refunds. And of course, as you were saying, there's all different types of tariffs. So some will get refunds, some are eligible, and others, like furniture, auto parts, are less likely. They don't have the same refundable tariffs. There's different types of tariffs. So everybody's just trying to figure out, okay, going forward, how do we think about pricing? It is nearly impossible for a retailer to look at this and say, oh, great, now I have certainty. And uncertainty is the enemy of retail.
Now, if you take a look at the certainty and uncertainty aspect, there were points earlier on in the tariff cycle, going back to April, where we saw furniture companies, home furnishings retailers. We saw certain apparel makers, athletic or otherwise, Lulu's, Under Armour's, you know, that sort of thing. Also a Best Buy. When you look at the retail landscape about where there is relative certainty or uncertainty, what types of companies could then outperform in an environment where the tariffs are still relatively unclear?
Yes, so that's a great question. I think if you look at a TJX, for example, who's buying inventory, that's not leftover, but yes, often leftover from other retailers, extra capacity that they're taking up. That's a great example. Also, one of the biggest values in the market. The consumer is obviously out there looking for inspiration and value. And the other type of value they're looking for is consistency, easy delivery, best prices, and best availability. And that, of course, is Walmart, who has an 800 basis point comp spread between Target at the moment.
Wow.
And they're gaining share from that high-income consumer. They're literally getting the $100,000 customer coming to them saying, hey, Walmart's my place now.
I'm glad you brought them up. So we had seen in their recent report, correct me if I'm wrong, something like 3.2% was the price inflation that they were talking about. But there was still this sense, and for a lot of retail, you know, the story was, hey, the tariff impact is still coming. Like, these price increases are still about to be passed along.
Yes.
And I think Walmart was part of that. What does today do to that narrative? Does it change it? Does it reinforce it? Do we maybe not know yet?
I think retailers don't know yet, right? Because the big and powerful, like Walmart, have said, hey, we're going to try to hold price as much as we can, while brands have passed it forward. So they look at today and say, okay, well, we thought we had good news. Maybe we don't. So maybe we pass through a small price increase. And let's face it, retailers and brands every year, tariffs from no tariffs, they raise prices 5 to 7% every year. That's the worst kept secret on earth. And also, even if some of these price increases, we do get the tariff rebates, and also, let's say in a perfect world, we all settle and tariffs are a thing of the past, those price increases that have already happened are sticky. Mm-hmm. Retailers and brands never go back.
But they say they never go back. And I know that's true in a general sense, but it is interesting to watch post-COVID. The potato chips are my favorite tell on this, right? Like the bag of a pound of the price of a pound of chips got up to like $6 or $7, right?
Smaller, yeah.
And then you saw that quarter from Pepsi, and they're talking about price cuts and they're in consumer goods. So at some point, maybe, but they've been able to, like you said, they're 8-point comping Target and the others, and doing so without fully passing this along. And maybe they say, we can continue to not do. I mean, to me, that's the good outcome is, you know, they have to worry about that less, even if the president says more is coming. Right now, as of right now, all we know is that a big portion of this was just struck down.
It was. And also, if you look at companies, they've been forced under these circumstances to all of a sudden look at their cost structures. So they've cut a ton of costs out. So that's great. It's made them get leaner and stronger. But also, you've also seen a bunch of brands like a Tapestry, like a Ralph Lauren. Those average selling prices are up 30, 40, 50%.
Wow.
And their revenues, their results were crazy off the wall, up double digits.
So to that point, really quickly, top picks for the year, given what you know right now?
So I'm going to say Ralph Lauren pricing power. Walmart is the absolute value play for deals, and the inspiration value play, TJX.